Hi guys, and welcome to Binance's Off the Charts virtual conference. Today we'll be discussing the world of DeFi. I've got three amazing guests from some very special projects you're probably going to be familiar with. So first of all, we welcome Sergej from 1inch. How are you today?
Hi everyone.
Next up, we've got Felix. He is from ARPA. How are you, Felix?
I'm good. How are you guys?
Very good, thanks. And last but not least, we've got Calvin from Compound. So how are you, Calvin?
I'm great. Thanks for having me.
So I thought just quickly, maybe give us the elevator pitch, what your project does for those that aren't familiar with it. So do you want to kick us off again, Sergej?
Yeah, 1inch is right now what we are doing is aggregation. So we solved last year a huge problem in a DeFi space. We combined all the small liquidity pools into a single one by using dynamic algorithms and offer now really the best price in the DEX market. So almost also we reach sometimes the prices of the centralized exchanges. And we are going to go direction to be a single point of entry for DeFi and release more and more futures. We have an earn space where everyone can find a liquidity pool and provide liquidity, or can stake, for example, on Curve pool and synthetic staking pool to earn like 10-15% of APR. Yeah, that's what we do. And
thank you. It's a great product. I'm sure plenty of you guys out there have used it. And I'm sure Binance will link it all down below to all the projects, and we'll talk about it more in just a sec. But next up, Felix, do you want to give us the rundown on ARPA?
Sure. Yeah. So ARPA was founded 2.5 years ago. We are a team based in mostly China. I'm in Beijing. We are a privacy preserving computation network that mostly cater to enterprises, right? So several clients that we work with are JD.com, the second largest e-commerce company in China, and also Didi Chuxing is the Uber of China with higher market capital, right? So so we do secure computation, unencrypted data, and so we protect data privacy at the same time we extract data value. But then, like we do have some plans in DeFi, and we recently did a survey with 700 different respondees from both Chinese DeFi community and also the Western DeFi communities, right? Happy to share that in the future session.
Absolutely. I'm looking forward to getting into that. And Kelvin, I'm sure plenty of people have seen Compound in the headlines lately, but for those that don't know, give us the rundown.
Yeah, Compound, our team's based in San Francisco, Compound Labs. We built and launched the Compound protocol. The Compound protocol is on Ethereum. It's an interest rate protocol for users to earn interest or borrow crypto assets. It's been live for about 2 years. Just about 1 month ago, though, we launched the governance token Comp, which can be used to basically upgrade the protocol over time. And Comp is distributed to users of Compound. So this is sort of a month ago, just marked this transition from Compound being maintained by our team to being maintained by a decentralized community of Comp token holders who can sort of take this interest rate protocol infrastructure, whatever direction they want in the future.
It's probably one of the most talked about things at the moment is that transition away and how we can bootstrap these networks. And we'll certainly get into that in just a second. But first off, I did want to go back to you, Sergej, and talk about 1inch. So as you mentioned before, you guys pull the liquidity and aggregate that all together. And one of the problems with the DEXs last year and the year before, it just wasn't the liquidity and it was really clicky to use. So you guys have solved a lot of those problems. It's very exciting, but more so what I get excited about is the fact that these DeFi Legos, as people are calling them, are all sort of clicking together and making that user experience a lot better. So do you want to maybe talk about the DeFi Legos, what you guys have had to do, and maybe some of the problems that we're seeing because of the gas fees at the moment?
Yeah. We see that in DeFi space, it's very important to be composable. Yeah, all the money in Legos, like also Compound protocol is for us also as a money Lego. We have really deep integration of Compound, and you can only achieve a really great user experience if you put all the money legacies together into one, like all the puzzles into one big picture, to have really more people on board in the DeFi space. Last year we had less projects, and now almost every week new protocols popping up. So and and we like to work with all the projects, and you need to be composable, because otherwise you will just not reach the goal. From our point of view, I can give you best example. Layer 2 solutions are, from our point of view, without any future. So they will die with a small liquidity, and of course they have some benefits. For example, DYDX paid long time for the transactions, but it's not the right solution, to just attract people to swap a specific period of time, but they would like run off the money, and would also keep not the highest liquidity in own project. So right now, what we created, and where we continue to work, is to provide people the best prices on the market by just discovering all the liquidity pools, projects, and for example, the liquidity is getting more and more distributed. For example, Balancer released, Uniswap V2 released. Everyone create own pool on Balancer. You have kind of already like 300 pools on Balancer, maybe more, and there are more coming. And no one can discover that all without setting a framework, a protocol on top of that. That's what we are doing. About the gas costs, this is pain right now on Ethereum, and you have maybe heard about our gas token, Chi token. Like our name 1inch comes from 1inch punch from Bruce Lee, and we thought like we need to create our own gas token, which is more efficient than the original one, GST2, and we named that Chi token because to do these efficient things on the blockchain, what we do, this 1inch punch things, you need the power, and for that we have the Chi token. You can reduce the transaction cost by 32-33% of the gas costs. Of course, this is a hack of the Ethereum virtual machine. And with Ethereum 2.0, it would be completely different, But for now, it helps a little bit. So if the gas price is very low, you can mint it with your Ethereum, and when it's high, you can burn it, you can sell it, you can speculate on that. It's not financial advice. So and and you can use it for swapping. Like right now, it's 50 Gwei. Yesterday was 20 Gwei, or 15, and you could just mint it and burn right now for your swaps. So, but how I already said, this is like a hack. It's not more, not less, and we need better solutions to solve that. And from our point of view, this is next generation of the blockchains. It's sharded blockchains. It's Ethereum 2.0, or right now you can already work on Near protocol, and it's faster, cheaper, and it's sharded. But sharded architecture needs also rethink everything. All the standards we have in Ethereum, we have to rewrite it, because sharded architecture is different from what we have right now.
That's correct. We might get back to that later, but I do want to get through all these in 20 minutes. So we'll go on to you, Calvin, and we'll talk about the bootstrapping. So this is something that a lot of the different protocols are experimenting with at the moment. Can we get the users? Can we get the liquidity? Rewarding them with these governance tokens. So do you want to maybe talk about the pros and cons? Because people are saying that this is great in the short term, but is it going to lead to genuine users staying on and making the right decisions once they have the governance token?
Yeah, that's a great and interesting question. Because what happened with Compound and the Comp token when we launched roughly about a month ago, we as a team didn't predict that, didn't expect that type of hype. Obviously, it's fantastic, and hopefully, people have said like maybe we've kicked off a little bit of a DeFi bull run, which is super exciting for us. But the true motivation for the launch of the comp token was and is still primarily decentralization. It is that we want users of the protocol to sort of be rewarded with this governance only token that allows them to express their opinions about how the protocol could be upgraded to be made most useful for them over time. Though the token is traded, has a price, is speculated on, that is the primary goal of the token. And it's not, it wasn't really about liquidity mining. It wasn't, I mean, that term didn't even exist, I think, before a month ago, really. It wasn't really about user acquisition. I think just watching what's happened in the past month, though, has really cemented for me the idea that a token for these DeFi and other protocols really does help solve user acquisition and even value capture. And so in that way, I think generally for projects, it's really, really important. And it's really different than any other type of business model that existed before. You can build in this new type of asset that is a customer acquisition channel and a value capture sort of business model. But for us, primarily, it really was about and is about decentralization, which is also working. The governance system is sort of really vibrant with the amount of proposals going through. And hopefully over time, all those three things are aligned: decentralized governance, user acquisition, value capture. But certainly our goal was decentralization.
Fantastic. And I completely agree. I think there was so much going on behind the scenes with Ethereum, and sometimes you need a narrative or just the name yield farming, and then all the memes come out. And sometimes that's enough for the average users to kind of put two and two together and understand what's going on. So speaking of average users, Felix, sometimes we've got a bit of a veil of secrecy and people don't really understand what's happening in China and other parts of Asia versus in Western crypto culture. So I'm dying to hear what you found with this big study you did.
Sure. Yeah, so actually we became, even though like our main business as for now is still privacy preserving computation, ARPA is at the forefront of the research and also standardization globally, right? So we participate in IEEE ISO standardization for multi-party computation. But then like I grew like a keen interest since early this year, at the beginning of this year. So we did 3 surveys in total, 1 in March, 1 in the past month, and 2 in the past month. Right, so the one that we did in the past month, we received about 350 response from Chinese community and the other half from English communities, right? So it's all from ARPA communities, but we do have multiple languages. So I have some very interesting findings and also discrepancies between these 2 communities, right? So just to start off, we asked people like, have you heard of DeFi? And 85% of the people in China have heard of DeFi versus like 96% in the West, right? And then like the second question was like, have you ever invested in a DeFi token? 40% in Chinese, they said yes. And that number was actually 80% from our English respondees. So that's a big discrepancy there. And also we asked about, you know, have you ever did like liquidity mining or just like join the pools? And about 30% and about like 25% in Chinese in the Chinese respondees they did, and that number was 35% in the West. So I would say there's still like a lack of penetration in the Chinese crypto market, even though like the Chinese crypto market has huge volumes, but most of the users are still in centralized exchanges, and I would say like I'd expect that trend to become more decentralized. But then like I also look at the user counts for the current DeFi protocols, for example Compound, right? So even though there are about 5 million people, they trade cryptocurrency actively, but for the users in DeFi protocols it's about 1% or even less, right? So we have still like a huge potential untapped market. We have to use some shorter, like easier user onboarding mechanisms, or some liquidity mining and bonus token for people to participate, right? So we ask the reasons why people are willing to participate and what are the concerns for all those DeFi protocols that currently have. And about 75% of people say in both Chinese and English response, they say they require a 15% or more return on investment on an annual basis. So, that is combined for the liquidity mining plus the normal interest. And then 70% of people say, the gas fee has to be less than $2 for one transaction, which is now, even more than that number, right? So those are the two main things that people would want to use DeFi or the requirements for DeFi. And the reasons and some other reasons are, interest rate mining, permissionless, convenient, and safe. And for now using was no access. About 25% of people in both Chinese and English communities, they don't know how to access a DApp, or some even don't have a real crypto wallet, right? Some of them only use exchanges, and a lot of people concerned about the securities. About 30% of people concerned about securities, and also the slow and poor user experience that the current products are offering. And the other thing is, the other very interesting finding is currently most of the users are still using PC, to access protocols. But then, if we look at mobile internet trend globally, I think that is slowly converting into mobile, right? So we have some Wallet Connect, we have Magic, and we have some better, Argent, those crypto wallets, and I expect that trend, to become more mobile based versus PC.
Yeah.
And for the user image of our survey of our respondees, there are 60% of the people from the English community that are under 25 years old, but most of them have more than 3 years of experience in crypto investing. I think this might be a little exaggerations, but a lot of people are involved in this field, like speculating or investing for a long time. And for the Chinese respondees, there are about 60% of people are between 25 years old to 35 years old, and 40% of them have 3 years of experience in crypto investing, right? So now analyzing that data, actually, I think we are about to reach the cycle bottom, because there are just a lot of people that have been around for a long time, and there's not much like new users for even crypto trading. So I think the next year is going to be very great for both crypto in general and also for DeFi as well.
Yeah, I completely agree that the biggest, I guess, attraction for crypto and DeFi in general in the next few years is when we start to have negative interest rates, and yet someone can look at this easy to download phone app and start to see that they can get a better yield and then a better product to swap tokens, start to use these different D apps in everyday life, and it just gives a better user experience. So I'm just conscious of time. We might rip around quickly and give us something exciting that's on your roadmap, either short term or long term. So do you want to start us off there, Sergej?
Yeah, big announcements from our side would be we are going to launch our own token. Yeah, it wouldn't be a governance token. We think a little bit different to current hypes. We think to stay permissionless is the right thing. So what Uniswap showed us, they just destroyed Banker with a permissionless platform. So in this direction we are going to move. And yeah, very soon, a new algorithm which discovers much better all the liquidity out there and provide much better prices for everyone, on one edge.
And I'd probably say just be cautious as well, because there have been a lot of scam tokens posing as certain projects. And I know 1inch had a scam token out there on these different decentralized exchanges where anyone can upload a token. So just be careful out there, guys. Calvin, anything exciting, short-term or long-term on the Compound roadmap?
Absolutely. As a bit of context, Compound's been around for over 2 years, about 2.5 years. And over that period of time, we've shipped product like 4 or 5 times. Basically, every 6 months, we ship something big. And that's because the development times in crypto take a long time. There's people's money going into Compound. And first and foremost, kind of the North Star at Compound Labs is the safety of user funds. So we're very careful, we're very methodical. We spend a long time planning and developing. So I think we have some really exciting ideas we're working on. I don't think the public will really start to hear about them concretely for potentially 3 months, 4 months, even further. But by the time we ship them, hopefully it's game changing. Hopefully game changing again. The direction that we're sort of thinking is towards kind of this holy grail of uncollateralized borrowing that I think all interest rate protocols are sort of thinking about how to solve. It seems sort of necessary or inevitable for the development of DeFi to eventually have to tackle this problem. The stages we're kind of thinking about it in are, today there are starting to be projects that are bringing Bitcoin onto Ethereum to be used in the Ethereum ecosystem. So this asset from another blockchain ported onto the Ethereum blockchain. The next step might be, can you take an asset that's not on the Ethereum blockchain and not on a blockchain at all, so an off-chain asset, and port it onto the Ethereum blockchain? And if you could do that, maybe at some point you could take kind of intangible assets and represent them on the Ethereum blockchain. And maybe those could be identity or reputation, something like that. So is there some framework, even starting with these Bitcoin to Ethereum solutions, that could eventually generalize to cover these other types of assets, off-chain assets, intangible assets? And that's what we're really building towards. It's going to take a long time, and it's going to be small steps every 3, 4, 6 months, like I'm saying. But you know, Compound's been around for 2.5 years. Our goal wasn't to build for 2.5 years and be done in crypto. I think we're here for, you know, our careers, and so we have much bigger visions than what's been achieved today.
Yeah, and I agree that wrapped Bitcoin is just the first thing that we are seeing used as collateral. There's already been other types, but we'll get to the point where maybe you can tokenize your house very easily. I had a chat with a supply chain project saying, can we tokenize the invoices for these people that are waiting to be paid 150 days, and people will loan against them? And I just think the DeFi, again, the composability and the Lego is very exciting. Felix, what's on the roadmap or exciting you?
Sure. Yeah. So because we did a survey, like we know that you know, there are something that's still missing in the DeFi world that, you know, people have to cover, right? So first of all, like the Asian market is like lack of penetration right now, and also the mobile trend is inevitable, right? So and the other thing is, like, if we want to tap into more users, there are two different potential tracks. The one is we acquire users from centralized exchanges. And the other thing is, you know, we bring people in from even outside of crypto, say like the enterprises or just like normal users. So I have a very similar, similar thoughts with Calvin, that, you know, someday, you know, the collateral is not going to be like the assets, not going to be cryptocurrency, is going to be some assets outside of the, you know, the current crypto system. And also, like, if we look at very long term, you know, the CBDCs, right? So central bank, you know, issued digital currency, that is going to be the currency similar to, you know, USDT, USDC, and is ultimately going to fund, it's going to expand multiple times of the current DeFi, you know, DeFi landscape. So we are moving to that direction as well. So, and also we're going to release a product more mostly catered to crypto audience, but later, you know, so this product is going to be in, you know, in the market in late 3Q to 4Q, and the next year or 1 to 2 years, we're gonna bring outside assets into the blockchain. That is going to be a longer term plan for us.
Fantastic. And as I touched on, yeah, that's something I'm also very excited about. So I guess thank you all for joining us today. I'm Alex Saunders from Nuggets News. A big thank you to Sergej from 1inch, Felix from ARPA, and Calvin from Compound. I'm sure the guys at Binance will put all the links down below. And it's been great to be part of the virtual conference. So thank you all.
Thank you.
Thanks, Alex. Bye.
Thanks, guys.